Against the backdrop of the Fed meeting last month, which I guess raised the prospect of a potential rate increase in the next couple of years, what do you see this as a significant risk for markets, particularly as current valuation levels are above historical average?
Yeah, so it's been interesting, hasn't it? Because I think the US has got this dual mandate, which is to control inflation and to promote maximum employment or full employment. And it's that latter part of that mandate which has got the focus most recently. And I think it wouldn't be unfair to describe it as being the primary driver for the kind of the Yellen Bernanke, what am I trying? I've been looking too far back into the past. But unemployment is clearly is one of the new focuses in this post-COVID world. I think policymakers are very keen to bring the unemployment rate back down. And if you think pre-COVID, it was at, I think, near 50-year lows, and clearly that's not where it is now. And as I mentioned in one of in my charts earlier on, it's that COVID's been one of these amplifiers of inequality, and the kind of unemployment that we've seen, it's really been the poorest, the hardest hit within the economy. So I think policymakers are really rather anxious to bring that down. So yes, I think you're right. Interest rates are going to rise. I think that's inevitable over the next few years. That rise has been very well telegraphed. It's been in the dot plots that the policymakers score their own forecast of where interest rates are going. But they've also been quite vocal about bringing down the unemployment rate and letting inflation run hot a little bit. And the way in which they've discussed inflation, I think, in the last few years, it has changed in a way that should be comforting to markets. And I think that transition is going to be relatively slow because it's about targeting inflation through the cycle. So can policymakers hit the target level of inflation across the cycle? And if you think about the last cycle, the answer was no. Inflation came in below their target, and I think they were rather anxious not to have the same thing happen again. So we can look at some of the headlines and the news and get rather excited about some near-term inflationary pressures. I think if we look at some of the longer-term forecasts for inflation, they are quite transitory. And if you think of the world in terms of the Phillips curve, it's not been that trade-off between inflation and unemployment just didn't exist in the last cycle, and I think it would be wrong to assume that it will suddenly exist through this next one.